This is 20 Minutes of Impact from the United States Energy Association Power Sector Podcast. I'm Herman K. Trabish. I've covered the power sector since 2006, and I currently report for Utility Dive. My guest today is Jon Powers, president and co-founder of clean energy investor and independent power producer, CleanCapital. Jon's going to describe recent trends in the clean energy development sector that not everybody has noticed yet. Jon's an Iraq War vet who worked with veterans groups, the Truman National Security Project, and the Pentagon as special advisor on energy to the Army after leaving the service. He spent 2 years as the Obama administration federal chief sustainability officer for the White House Council on Environmental Quality, and then was a Bloom Energy executive. He co-founded CleanCapital in 2016, so he's been at this for a while. Jon, let's start with the CleanCapital perspective on the clean energy sector. Clean energy faces incoming from the current administration, but it's continued to grow. So is that going to continue? Are there places where it's going to grow? How long can it keep growing with this resistance that it's facing?
Yeah, Herman, first of all, thank you so much for having me and the work you do covering these important issues. I want to take you back to just about a year ago when they signed the big, beautiful bill on July 4th of 2025 and really
Do we have to?
feeling
Do we really have to, Jon?
exactly, feeling the pain of, having worked for 6 months lobbying, trying to keep that from happening and thinking, oh man, what's going to happen here? And, I will admit I definitely came home to Buffalo and licked my wounds, but then went out to the big renewable conference, RE Plus, which was in Las Vegas in September that year.
Was there?
And yeah, I expected it to be a funeral march, and it was anything but. It was a nice reminder that, solar, for instance, is a $70 billion industry, that, that there is, the biggest trends, which I want to talk more about, is the supply and demand issue right now. Like, the thing the administration did not anticipate was how much growth in electricity demand there is happening, and why we need more supply and to bring on board. So, that really got me sort of back on my feet. And, for us at CleanCapital over the last year has been truly about transacting, continuing to both buy projects and develop projects. We are seeing some big trends. One is there are a lot of projects. Like, there is the amount of deal flow we've seen is really incredible. Truly, to build a project, it sometimes takes years. So this is stuff that was started years ago. We are truly seeing less capital. So, it's the uncertainty of the administration is causing some infrastructure investors and others to back away. It's given us a chance to lean in and try to find more opportunities. And the biggest change I think we have to face is, and I want to talk more about this when one of your upcoming questions, but is the expected upcoming changes to policy that is still coming at the state level and beyond. But I think overall we're very excited about where the industry is.
Yeah, that's the one of the things that was most interesting to me and why I wanted to get you on the podcast. Apparently what you're doing is a kind of a new approach to development, in the sense that you're acquiring and advancing these stalled or not yet built projects. I guess they ran into some trouble, perhaps with the new policy. I'm not really clear about why they're stalled or didn't go into construction, but I understand that you're able to access some institutional capital to actually bring them online. So tell us about that new kind of approach that you're involved with. Is this a widespread thing that's happening? Why did these projects stall? Um, what's impeding the process? And why do you think, if they've stalled and they weren't getting built, why do you think they're good investments? How can you get institutions to fund them?
Yeah. Well, first of all, I'll tell you, we won't be investing in it if it's not a good investment, right? So if you fall back to 10 years ago, Clean Capital, we launched ourselves with the mission of bringing down the cost of capital into the asset class, right? So you had high cost private equity at the time. We actually crowdfunded our first portfolio, but when you have higher costs of capital, it drives up the cost of the project, which in turn drives off the cost of electrons at the back end, right? So more you can bring down that cost of capital, the better. We are now backed and have been for the last 5 years by Manulife, which is a life insurance company out of Canada, as well as some of their partner LPs. So that infrastructure money is for us long term and patient, right? We're truly looking for the right deals, the right time. So why have some of these projects stalled? First of all, when we look at projects, we look at it from a lens as an investor and a long term owner. So we want to make sure it can be built, the revenue streams are right, et cetera. I think there was a lot of pausing in the market last year because of, as you mentioned, the Trump administration, really changing the game in terms of policy. And that not only backed away investors, but it left a lot of stranded developers. And so, I would think of it less as projects that are paused and more projects that are stranded where we can come in and invest and get it going again. So we sort of look at that lens as one of the multiple ways we're bringing deals in. But we think, what we have proven in our track record as a company is, when we look at a deal and we decide we're going to move forward, we have a strong track record of actually closing on it. And that's not always the trend in the industry. Like often things get retraded or people back away. We, like to sort of believe we do what we say we're going to do. And that gives the confidence to those sort of stranded developers.
First of all, before we go on, you mentioned an institution that is what your key source of funding, a bank. Could you repeat that?
Yeah, Manulife, which is a Canadian. It's so we work through John Hancock, which is the Boston-based sub. It's a part of Manulife. Manulife's the mothership, which is basically people are putting life insurance in, right? You pay your life insurance bill. Well, Manulife will then manage that long term, so they ensure your life insurance is there down the road, right? So they want to make safe, common sense investments, and we're one of their investments.
And Manulife, like manufacturer's life or something like that. Is that?
Yeah, it's a good question. It's a Canadian-based firm, and I actually don't know what the Manu stands for, but I should
That's
find out
okay.
that out.
It's interesting because that was, I think Warren Buffett started out investing in insurance companies because it was such
Yeah.
a good, smart way to go. And he has subsequently in recent years become, or his company, because he's not running it anymore. Greg Abel's running it, but he's subsequently become a major investor in clean energy. His utilities, Mid American Life, etc. They're doing. You're following in the footsteps of Warren Buffett. Congratulations, smart
I'll take it.
move.
I'll take it. And by the way, it is
Um,
manufacturers. I actually looked while we were talking. It is
but
manufacturers' life. But for quick, Herman, like why is that important? Like, because our strategy in the beginning was trying to bring down the cost of capital. When you're thinking about life insurance or pension money, that infrastructure money, the return expectation is different than high cost private equity. And when we can have that in our asset base, it means more, there's a lot of it, one. And two, it is a better type of capital, both for long-term investing and then ensuring that, the electricity prices coming out of the other end of the projects are reasonable.
is there a pattern to what you found in picking up these more recent stranded assets? Is there particular parts of the country where they're more common, or are there types of projects that are more vulnerable, that were more vulnerable to what happened last year? Is there any kind of
Yeah.
pattern that you've identified?
I think there's two patterns. When you look at operating projects that are running, which I wouldn't call stranded, but we also buy a lot of operating assets. In many cases, we have bigger investors who are backing out of our sector, and it gives us a chance to come in and acquire those portfolios because we really do believe in this middle market. Like we're not doing large scale utility or residential. We do the sort of middle market area. And then in terms of development, I'd say it's less geographical based and more developer based. So, who are you backed by? How much capital do you have? Did you have money to do a safe harboring strategy to buy a bunch of panels, right? So it truly is capital based. And, I think honestly, we're going to see more and more of this in the coming months as people are getting through their safe harboring strategy or they're just hitting the point where their capital may be running dry. That for us is a chance to sort of come in and sort of save the day.
So, just briefly, so folks will have a little additional information from this conversation. When you talk about safe harboring strategies, what you're saying is up until a certain point last year, I think it was last year, the tax credits were available, and you could get them extended a little bit longer if you invested a certain amount of money in the project. And that's called safe harboring in the tax lingo, right?
That's right. And it's usually done by buying some pieces of equipment, right? It could
Right.
be a portion of the panels or an inverter or some major investment in the piece. So, we made a decision to do some of that ourselves and other halves as well, or we've partnered with folks that didn't, so we can bring our pool of panels in.
I see. So that's what you mean by the differentiation as the developer. I want to move on to batteries in a second, John, but
Yeah,
just to clarify, um, you mentioned that it was kind of the developer that made you kind of more interested in the project because just like any other business, some developers are a little bit more vulnerable for whatever reasons, their safe harboring strategy, their capital base, uh,
yeah.
extraneous things, and took a close look at the developers that needed your help, and you came in and acquired them, rescued them, partnered with them. How would you describe it?
Yeah, I would say we acquired the assets or we find a way to partner with them. We haven't really acquired too many developers themselves. And it's important. Developer is not a monolithic term, right? It's like you have some are small shops of a handful of people that are really good at what they do, and they only want to take the project so large. And some are larger companies that traditionally have developed projects to a certain point, and then what was called development and flip, the old model. And we're seeing less of that today, just because there's less capital out there.
Well,
So
let's
they're
talk.
looking for people that can do more return, and recycling the projects together or the
Gotcha.
capital.
Gotcha. Okay, so let's talk about batteries now. One of the interesting things about batteries, and I noticed this in all the way back when the first Trump administration, when the Trump administration first came in, was that the tax credits for batteries stayed in place. Now, I was a very interested in that because, I go back in this business to cost-effective energy storage was called the holy grail of the power system. And it seems
Yeah.
like right now we've found the holy grail. So I want you to talk a little bit about what batteries you're interested in for your projects, the sizes, the chemistries.
Mm.
Where's the magic? I recently did a story about XL Energy, one of the really big and important utilities in this country. And they're in Minnesota, they're building grid scale batteries with Spark Fund, and they're building behind the meter customer owned batteries with VPP developers and with community solar developers in Colorado. So is there a right choice? And I got to tell my listeners ahead of time, that's a leading question because I'm pretty sure you're going to
Yeah.
say both.
Yeah. There is. So first of all, going back to your Holy Grail comment, I remember that terminology thrown around a lot with batteries. And what took so long? What took so long is put the technology aside for a second, and it was the revenue models, right? And understanding every state has a different revenue or policy fiefdom that we're living in around clean energy as a whole, but specifically batteries. So you really need to understand, how is this battery going to make money? Can I sell it during a very specific time? Can I sell it behind the meter? Like it really is almost it's very geographically centric. So I think that is the current constraint to that market. It is not the technology. The technology is pretty much proven. And then in parallel, getting the investing side, the capital markets, not so much the equity or infrastructure investors like us are getting there and getting comfortable. We've done a bunch, but your partners who do the tax equity or the people that put a mortgage, right, the debt on this portfolios, getting them there, right? That's a big part of it. So from Clean Capital's perspective, we're never the first mover on technology. It's not our capital. We're the infrastructure growth capital. It's the scaling a market. So when you think about our technology, it's about what's sort of proven. So we do a lot of stuff right now with lithium. We're very much scouring the market regularly for what else is coming and seeing not only what else we can get comfortable with, but also what can meet the timelines that we need to meet to get our projects built. So there might be some really cool new project or battery, but if they can't scale to manufacture it fast enough for us to put into a project in 2027 or 28, then we may have to think about that down the road, right? And we're okay with that, but we just need to meet that scale that we have in front of us now.
I hear a lot of people who are interested in VPPs talking about the fact that they can kind of
Yeah.
to the system much faster. What is the time factor for grid scale batteries when things are humming, and versus the time factor for VPPs? Is there a significant difference?
I would argue, yeah, I would separate less of PPP and more just DG distributed generation versus
Mm.
grid utility scale. There is an absolute difference, and it all comes down to the utility and permitting. So, how fast you can move to get the permits, or the utility. The utilities are usually a long pole in the tent. They're seeing in Massachusetts, they're studying and studying and studying. And I get it. Going back to the idea of the premise of this podcast is the energy transition. That they're obviously critical players to this, but we need to see an acceleration in their ability to execute. It's so important to get these things online in a timely fashion. Otherwise, right now we're seeing everyone's electricity prices go up, and that trend will continue unless we can get more supply on the grid ASAP.
Anticipated my next question, and this is the last question, and I want to squeeze it in. We don't have a whole lot of time left, Jon, but you worked in the Obama administration, so if you're not a politically oriented person, I'm not going to call you a politician, but if you're not a politically oriented person, you certainly were surrounded by them in those years. Why has electricity affordability become this major political issue? I mean, my friends at the North Carolina Clean Energy Technology Center just
A great group.
released a new.
Yeah,
What'd you say about them?
a great organization. Great
Great.
organization.
Yeah, they really are. They just released a new quarterly policy update on state level policies about affordability policies. And the proposals that they listed, they're going faster than Canadian wildfires. I mean, what's happening here?
So I'm gonna end game first. That I've seen that paper, and there's a lot moving right now in the idea of the action items we need to move policies forward. 2027 is going to be an incredibly active state level policy fight on so many fronts. And the question I have, I question the industry leaders and others, like we need to be both funding that fight and in it. So why? Because the thing you for is beginning affordability. There is again a supply and demand problem, right? Whether it be data centers or just the electrification of everything, demand is skyrocketing. You think about the way people see the electricity bills, you're not seeing the change on your bill for a significant amount of time because the utility has to pass a rate case, right? So we're only seeing stuff from almost a year plus ago, right? So people are opening up their bills and saying, oh God, now it's 20% more, 30% more. And it is actively hitting those numbers already. And we're just at the beginning. That doesn't change until we can address the supply, right? And luckily, the fastest, cheapest supply is clean energy right now. So we need to be making that case and getting projects developed. I heard Bill McKibben say recently, which I really loved, if solar used to be the Whole Foods of the energy market, it is now the Costco. And we need to be bringing that message forward that we can meet the demands today. Maybe not all demands. Maybe we have to, continue to work on these other things. But we need to be part of the solution. And that is an affront to the position that it's in Washington today. And as a result, they're having to backtrack because they are not meeting the demands of the American people.
Couldn't agree more. There's so much there. I think maybe we should have a whole series of podcasts on
I love it.
electricity affordability at some point. Um, but we're going to leave it there for today. My guest, and I want to thank you very much, has been CleanCapital President and Co-founder Jon Powers, and he's described some of the key emerging trends in clean energy from the point of view of his independent power producer business. I also want to thank my producer, Melissa Brown, and as always, I want to thank our listeners for taking the time to check out the USEA Power Sector Podcast. Don't forget to subscribe, like, follow, and share with everybody you know our quest for energy transition solutions.